Hi traders, welcome to the live stream today. We have a very, very special guest with us today. We've got Rich from tzriczywiDelicious. He's going to help us go through these charts, help us point out some key levels that he's looking at, maybe a few cheeky opportunities that Rich maybe wants to point out. I don't know. But yeah, we've got a really interesting stream today. Obviously, we've had a very, very interesting week already in terms of data, some big data drops in terms of the interest rate decisions globally. So we'll talk a little bit about that once we come onto those particular charts of interest. But yeah, let me know who's in the chat today. I know we've got a couple of viewers already. See if we've got any regulars in. Yeah, but Rich, why don't you introduce yourself to the guys, and then tell us a little bit about how you got into trading, and tell us a little bit about tzriwiedelicious as well. I'm sure the guys would love to hear from you.
Sure thing. Thanks for the warm welcome. I'm excited to be here. It's first time streaming away from tzriwiedelicious being on a first time meeting you. So it's a pleasure to be here. Please don't expect anything amazingly polished from me. I'm a normal guy who got into trading around about 5 years ago. I'd love to give you some amazing story about how, I got into it very, very uniquely. It wasn't. I Googled how to invest money, and Forex was the first thing that come up. What I didn't understand was I was trying to invest, but what was coming up was trading. And I didn't understand the difference between trading and investing. I was looking to use personal money I'd built up, and I was like, hey, how can I turn this into more money? How can I make this work for me? And it went horribly. It went really, really horribly for about 2 years. And then I started to understand, actually, there's a difference between investing. There's a difference between trading. And what I do now is I try and turn my money over a bit quicker. I'm trading, intraday trading. So I get into the markets and I'm typically out in under an hour. So I think my average trade time is about 51 minutes. Do not like holding trades overnight. So if I can avoid that at all costs, and honestly, even 5 years in, I'm still learning so much more about myself and what fits me as a trader. I've been profitable for about the last 3 years. It's been a bumpy ride, but it's really starting to pick traction now. And not from the sense of, my strategy's working, but I'm understanding how to position myself in more of a discretionary way. Whereas prior to that, I was a pattern trader. I thought it was super, super complex, but no, it just turns out I was a pattern trader, just looking for very specific patterns in the markets and trading that day in, day out. And yeah, I've done that for about 5 years now. So
awesome. So when you say a pattern trader, it wasn't like harmonic stuff, was it? Or
no, that stuff's way beyond me. Yeah, no, like head and shoulders patterns.
Okay, yeah.
I first learned like sweep of liquidity. So we probably have all heard of the ICT term. I went through hundreds of hours of content, and I kind of learned this thing that was called an order block. And I'm like, I've seen that. I know what that is. I know what to do with it. So I went off to the charts, and that was where my first 100 hours was spent back testing what these order blocks meant. And I started to notice these little patterns around price, but I couldn't find something consistent that was profitable. So I'm a big advocate of data. I love back testing as well. If you turn around and say to me, hey, Rich, there's a 20 moving average, use it on this time frame, this pair, it will just print money. I'm going to go, okay, thanks for that, John. And I'm going to go off and back test. Yeah. I take what people say with a pinch of salt, and then I'll go and prove that concept works. It's nothing worse than sitting there spending the biggest currency you've got, which is time, wasting your time 3 months forward testing something. You have no idea if it works. You can spend 16 hours back testing it. You can get loads of information about it, and then you can build an expectancy of what you hope would anticipate moving forward. Sorry, I appreciate that's a big rant for a 2-minute open into a stream.
No, don't worry about it. Obviously, like we had a little chat before, but we're both meeting each other for the first time, so I think it's always good to understand everybody's background and whatnot. So yeah, let's move on. Let's dive into a few charts of interest. Then I'm going to go talk about a couple of things. One thing that I really liked today, I don't know if you tried dollar yen, Rich, but dollar yen obviously rallying to the upside at the moment. I actually felt there was a good chance that this rally that we're seeing at the moment would continue today, especially if we go take a look at sort of our lower time frames. You know, overnight we obviously had a huge rally up from the Bank of Japan sort of dovish hike, and we've seen that kind of momentum follow through. Stepping into the US session as well, we're starting to see this little bit of a rally up. I actually thought 150 spot 50 would be a little bit of a point of a sticking point in terms of all these kind of highs in here and loads of what I would class as kind of volume in terms of the consolidation that we've got that's been built in and around this area. But obviously the way I kind of trade is I kind of look at sort of volume in terms of consolidation areas. So if the market has moved, consolidated, moved again, I quite like the idea of price coming and retesting that sort of volume point before looking for either a continuation, or does price get accepted back into this volume point? And if it gets accepted, does it go and seek the other side, basically? Or does it break? So the way we kind of, or the way I kind of looked at this today was the fact that we're being sort of accepted back within this volume here. So I like the idea of price potentially coming back and testing that sort of other side today. So I'm looking at that sort of 150 spot 88 area as sort of an area of interest for buyers that are long at the moment. I also kind of did a little video earlier today talking about sort of the participation of sort of buyers and sellers within the market. If I just go down to a 5-minute time frame, what I was looking at earlier was the fact that this little area here, where we had those sellers stepping at sort of 150 spot 47, 150 spot 50, we had quite aggressive selling coming in. But then as we reached and kind of tried to form that sort of double top pattern, we just failed. Lack of sort of selling coming in at that point. So I like the idea that if price could trade above this zone, that we'd probably see a little bit of a higher movement. We pull back into the area again, and we're obviously trying now to form a new high on the day. So I quite like the idea of price coming up into 150.88. I am currently long dollar yen down at this area at 150 spot 40. So I'm looking to see, can we kind of capitalize on this little bit of a move here on dollar yen? I don't know what your thoughts on dollar yen would be. I know you trade sort of cable and euro and DAX. So should we flick over to cable, and maybe you can have a little flick through and have a little talk about cable for us, if you don't mind, Rich?
Yeah, sure. We the interest rates missed on yen as well today, didn't they?
Yeah, well, they did hike.
But they missed they didn't hold. So it was a bit of an unannounced reaction to that. Never really traded UJ or even GJ for that much. I just find they're real trendy pairs, and I love picking reversals in the market. Okay. If the market's on its way, I'm just like, where are you going? Where are you going? There's somewhere you're driving to. Let me try and find that reason, that story, that narrative of where price may go to. And you drew it out perfectly when you said, hey, I like this area. We've got, acceptance in this level of break. And I was like, well, if that fails, I'm going to be a break and retest. And you literally drew it out perfectly. I'm like, I like that. I like what you did. That's pretty much what I'm doing when it comes to GBP USD and Euro USD. Now, the reason it's those two pairs is I used to trade what I called the 6 majors, which was GU, EU, NU, AU, UCAD, and UF, USD CHF. And I could never get any traction on USD JPY. So I dropped USD JPY, and I was looking for a very, very similar pattern on the 1-hour charts when I was trading these 6 pairs. And I mean, do we sort of go into R? Do we talk about R values much on stream? I want to sort of try and keep it relatable.
Yeah, you go with what you want to talk about. Yeah.
Okay.
So do you want me to add your screen to the chart? Would that help if you want to?
Yeah, sure.
Yeah, let's do that. Let's do that. I'll add that.
Okay.
There you go.
I'm gonna take a moment and just say your screen looks amazing. I'm totally gonna steal those colours after the stream.
Brand colours. Got to give them the push.
I'm probably the most colourblind guy in the room at the moment. So when it comes to putting colours on a chart, there's certain colours that they kind of look pretty good to me. So I'll work with these at the moment. This is pretty much what I've got. So when we're talking about R, what we're doing is we're talking about risk. And so if I said, hey, I'm going to risk $1,000 or I'm going to risk $100, there's no difference. It's 1R. I'm risking one of whatever I'm allocating. So if I said that I'm going to keep my risk the same throughout an entire year, what I'm looking for is how many R did I make by the end of the year? How many R did I make that month or that week? And it gives me an idea of what my return is based on my risk. Now, my return used to be round about 6 R a month. So if we're risking $100, be making about $600 a month. Now, don't get me wrong, I'm going to have losing periods. And what's very important is to know how many times did I lose. And I'm a one-to-one trader. So what that pretty much means is I just want something like this. I just want to be risking kind of the same distance to my stop and my take profit. I don't want to be trying to hang on to my trades all the way down to here and post them on Instagram. I'm not interested in that. The win rate on this is going to be so low. The traders typically, to start trading huge risk to rewards, you're going to be sub 30% win rate from my personal experience. I've spoken to hundreds of traders. There is not a single trader that's been able to break that mold. And plus, from my own personal experience and all my own testing, it's always followed suit. So what I like to do is just have a one-to-one risk reward, which means I'm going to be entering wherever the price might be. We're going to call it on this, we say here, for example, we're going to enter a short on this high. We saw a little bit of selling pressure. Maybe the market's not done with this level. I'll put my stop on a place where I'm just wrong. Could be the structure high here. And I'm going to just target one-to-one. Now, what that means is if my entry's filled, I'm going to be risking one of whatever I want to risk relative to my account. If I've got $1,000 account, I'm not going to be risking $1,000. We practice good risk management, so it might be $10. I might be risking 1%. So this would be my entry. If it hits the high, I've lost $10. If it hits the low, I've gained $10. If it hits the high, I lose 1 R. If it hits the low, I gain 1 R, one of what I'm risking. So this is the stuff that's not often spoke about, especially in the retail space. I struggled to get information on this and managed to go to a trading event in London and spoke to Jordan on Trade Delicious. And I wasn't streaming with him at the time. And he was saying, does anyone know about expectancy? Does anyone know about, how many R, what's an average per month, average per year? And I was like, well, I know these numbers and nobody ever taught me it, but it was my metrics to kind of measure my performance. So I was performing around about 6 R a month. So if I'm risking $1,000, I'm making 6,000 a month. It doesn't mean to say I make 6,000 every month. There'll be months where I make 15 R and there will be months where I lose 5 R, 6 R or 7 R. And I was up around about 85 R after a year. And I'm like, this is good. 7 R a month. This is my average. This is
very good. Very good.
And I'm like, I'm going to keep going with this. And this is the system that I'm going to show you on the screen in a minute. And I went through a 7-month break-even period as soon as February hit, which is when when Russia, when the war happened? Was that February?
Oh, I don't know. I can't remember.
Okay, it was pretty much the moment that announced. I'd never taken a bigger drawdown than 4 R, which means I'd never had a bigger losing streak than 4 consecutive trades. In 2 days, I took 9 losing trades, and I'm like, I don't understand it. And it took me 7 months to get back to break even. And I just said to myself, do you know what? I don't want to sit here for 7 months and not earn money. That's a rough gig. So what I was doing was pretty much using head and shoulder patterns or liquidity. So this is a perfect example. Anywhere you see a higher high and a break of structure, I wonder if I can actually use, I can use a replay tool. And this was my system. I was literally just saying who's in control of price and where did they lose control of price. So we start building this bullish structure and then we just completely sell off. And so my system was, well, I'm going to mark up this high. I'm now interested in every area that's above this high, and I'm just going to sell the market whenever it comes back. And that was it. That was my system. I would mark this up and say, well, this is an interesting zone. And I think that the market's probably going to break this low. And we've got a huge amount of selling pressure up here. And I think the market's going to do this. And if I am the clever one with a trade, I'm going to end up doing this. And this is what I used to do for honestly, probably about 18 months. Until I just figured I didn't like the way that it delivered results. I was trading 6 pairs, getting 14 trades a month. My expectancy was around about 0.46. And my win rate, I think, was 64%. I'm a big guy with data. I love my data. And this is what I did every day. I would sit there and the amount of times the market would do this and it would miss my entry. And I'm like, I don't understand it. Why? Why is it doing this to me? And all, the market was against me deliberately. With my $200 risk, the market was trying not to fill my order. I come up with all these kind of stories to try and understand what price was doing. But ultimately, scrap this and scrap this, take this and extend it all the way over here. This now just becomes a supply zone. That's it. I trade similar kind of stuff, and I'm doing this on 1 minute charts. So high time frame stuff, 4 hour, 1 hour, and 15 minute for context. So this would obviously be a nice 1 hour zone. And then I'm diving down to the smaller charts to try and get a little bit more of a refined entry. But important to note that the analysis comes from a higher time frame. The 1 minute lies to me through its teeth. I'm only looking for small entries on that. That's pretty much it. So it's kind of an evolution of supply and demand. I think somewhere in the process I made it incredibly complex, and I should have just kept it simple, and just said, hey, how do these zones hold?
Yeah.
And much the same as you said earlier, like if this breaks, then I kind of like the idea that we're going to pull back and retest. Simple price action.
Yeah, no, I like that. Yeah, actually, that makes a good point. Even Vincent here, actually, I just wanted to bring this up. Said, Rich, thank you for sharing that. Some of us are expecting too much from ourselves in the market. If seasoned traders are expecting 6%, I think that makes a really good point, actually, Vincent, that we can put a lot of pressure on ourselves to get X amount of our return or a percentage return from the charts, but that's not as easy as it sounds. You know, it can be very grueling. I mean, when you said you went through a 7-month period of break even, that has got to hurt. That has really got to hurt, I think. And to have the patience though to go through that is I'll take my hat off to that, Rich. That is amazing. I think a lot of people would have turned around at that point and been like, this is not going the way I really want it to go. I'm going to try something else. I'm going to go do all these different types of wacky strategies out there. But no, fair play to you for holding on to that. That's great.
So there's this balance, isn't there? Because we're taught, don't system hop, trade your analysis, stick to your plan, all that kind of good stuff. And I'm like, month 1, lost money. Month 2, break even. Month 3, lost a bit more. Month 4, tiny winner. And I'm like, I'm trying to stick to my plan here. This is what I've been taught to do, but it's actually incredibly difficult. But yeah, it developed me as a trader. It wasn't the lesson I wanted at the time. It was the lesson I needed. And all those lessons that I went through, they're the stuff that's compounding now. And that's what I'm standing on the top of, or the shoulders of, is the work that I put in over the last 5 years. I hate to say it, I've never met anyone who got profitable and stayed profitable inside of 3 months. It takes a few knocks and a few setbacks before you get to a point where, you know, you can look at those objectively and say, how can I make this slightly better for myself moving forward?
Yeah, absolutely. Just coming back to R then, I saw that you trade 1-to-1. Is that because you like to see more winners? You like your expectancy to be higher?
Yeah.
You don't like to see the other side of it?
No, I love having a high win rate. So yeah, I actually trade negative risk to reward when I'm trading the DAX. My win rate collectively from last year and this year is around about 90 to 91% win rate. Now, obviously, I'm not risking $100 to make $100. I'm risking 100 to make significantly less than 100, and that's the trade-off. But I can regularly go 20 trading days and not have a losing day, and that feels amazing. And the great thing is, let's say I'm risking $100 to make $40. When the loss comes, does it feel 2.5 times worse than the win? No. I get to say, hey, I traded my pattern or I traded my edge and the market didn't perform. We call this, I say we, I always talk about myself as like we. I think it's I'm just sitting in a room on my own too long. And I have to try and make it sound like I keep myself company. Germany 40, here we go. This is what I was trading. Let's just clear all these. This is what I caught this morning. I was talking about this on stream this morning, and I said, look, this is the all-time high on the DAX. If we jump to a monthly chart, you'll see price has never, ever printed higher than this. And same kind of stuff, what I was talking about on Forex, incredibly simple. Took me about 3 seconds to throw a zone up here and said, look, we've got selling interest here, selling interest here, and selling interest here. I think the market's going to come up. We were on the 15-minute chart. We had printed this indecision candle here. I said, I think we're going to run this one more time. I'm looking for the market to come into this zone and print me a beautiful engulfing candle. And it thought about it on this candle here. And then this monstrous candle just printed all the way down here. And I'm like, well, thanks. The analysis was good, but there wasn't particularly an entry. So yeah, just similar stuff. Market decided here to move lower. We pulled back. We continue to do that. And I want to be out before here. before where the market decided, hey, we're going to be a buyer, we're going to be a buyer, we're going to be a buyer, we're going to be a buyer. I get bored by saying it, but it's the same simple analysis. Market comes up to places where it sold previously, comes down to where it previously bought. Can you get a risk-adjusted return? Can you trade from here to here, and is it worth your while? If I can do that, I typically get paid a little bit for my efforts, which is it's nice and simple. I wish I taught that to myself 5 years ago. I would have saved so many tears and hard work.
Yeah, I used to have a little note just saying buy low, sell high, and I think although that kind of came in as a sort of stock, I would say saying in terms of stock markets, it works for everything I find. I would rather be a seller from a high than a buyer. You know, ultimately, I'd rather be a buyer from lows. So that's how I've always kind of envisaged the market. I've always kind of looked at it and gone, right, okay, well, I've got this area of structure here, the daily chart, whether that be, or the 4-hour chart. You know, can price advance beyond that high or not? You know, that's the point for me. If price comes into that high and it fails, then maybe those buyers are no longer interested in staying long in this market. So I'll go and look for selling opportunities at that point. I've always been of that mindset. Absolutely.
Yeah, I like that. I like that. Look, I don't get this opportunity much. John, tell me, why do you think markets sell at highs and buy at lows? Like, what is it about that you think? Do you think algos are coded that way? Do you think it's just loads of retail traders sitting there trading CFDs thinking they're moving markets? What is it you think drives markets at its core?
Do you know what? That's a really good question. I've never actually thought of it like that. I've always just thought of the market as there's buyers and sellers. There's people that are holding price, you know, and do they think it's fair value at this point? Essentially, I always kind of think of it as if the market's going sideways, I think the buyers and sellers, they're agreeing are in this area, in that zone. When does that agreement no longer matter to either side? Essentially, that's the way I kind of always viewed it. I've never really been asked that question before, so I've never really thought about it in that way. What do you think?
I think I spend too much time in a room on my own. I taught myself. I started to kind of tell myself this story. What if the market's not there for me? What if the market isn't for little old Rich, the retail trader? What if it's there for massive institutions to transact and trade globally? I was like, okay, so the bar to entry is low for the retail traders to come in, but it's not low for the retail traders specifically. It's not made for the retail traders. Maybe it's made for international transaction. Well, what if massive international businesses were hedging themselves? What if they had big long and short portfolios? And what if they were managing risk at certain price points across all these different assets? And my job as a retail trader was to try and figure out either how they've coded their algos to manage risk, or how you can see where my mind was going with this. I was just going deeper and deeper down this rabbit hole. But the reality was that the proof for me was in being able to read price action with some kind of consistency. So that narrative, I don't believe it to be true. I don't believe it holds any weight, but it helps me identify a story of, hey, sellers were interested and buyers were interested. Can I anticipate that they're going to do something? Because at its core, I do believe the markets are a footprint of human psychology. I genuinely believe that every time you tie your shoes, you'll do so with your, a certain foot first. Every time you open a door, you'll do so with the same hand. I think we leave footprints in our behavior patterns, and it's those footprints which I like to try and identify within these candles. So I'm kind of to the idea of human emotions move markets, and there's no better opportunity than looking for buyers and sellers to be in agreement. And when they're in agreement, obviously price stays in a range. When they disagree, I get excited. When the market starts moving away from a price point and I can see who's in control of price, I start to tell myself all kind of fantasies about where price is going and where it might go back. And so I don't have the answer. I think it's like opportunity to pick your brain and see if I can get some more ideas to fill my head up.
No. I've actually got a question for you here, Rich. LS said, hi, Rich, do you use volume profiles to get more accurate levels?
No, I guess so if we talk like level 2 data, I would love to see level 2 data for FX. As far as I'm aware, we can't get it. So what I'm doing is I'm guessing where I believe huge amounts of buyers and sellers are active in the market, willing to adjust positions, willing to add into positions. So I don't use volume profiles. I wouldn't know what to do with it. I'm down for learning, but I think it might just take me down another rabbit hole, and I don't come up to see daylight for about another 3 months.
Yeah, I've got a feeling you would actually love seeing that level 2 data, to be honest. Seeing the actual active buyers and sellers at different price points, I think you could get pretty obsessed with that.
Yeah. Do you ever use level 2 data?
I have done, yeah. I used to trade Euro futures.
Okay.
So yeah, I used to use level 2 data. I used to use like footprint charts, TPO charts, volume profile, all of that. But yeah, I mean, don't get me wrong, I still actively look at that, but we just don't show too much of that on the live stream. So we do show a bit of volume profile with the guys. I kind of look at the sort of there's kind of 2 different ways that I like to look at it. Again, it's just kind of identifying for me those consolidation zones within the market, and I think obviously that is where, like I said before, that's where I think buyers and sellers have agreed upon that area of fair value for whether it be for a day, 4 hours, hour, whatever. They've agreed upon price at that point. When it moves away from that and then comes back to it, that's where I feel like that's where the interest is in the market for me. And that's very similar to volume profile. If you were to look at this consolidation here that you've got, if you were to draw a volume profile on that, it would just show you where the most traded volume level was. It will show you the what they call the value area high and the value area low. The value area is where 70% of trading has taken place. So it'll give you a high and a low of that area.
Okay.
And then essentially, if price breaks out of it and retests it on the other side of it, you're looking for whatever action. So it's very similar. It's just adding another layer on top of probably what you already do, to be honest.
Okay. I'm not sure I'm ready for another layer. I think Jordan uses volume profiles on Trade Delicious, where the good thing about that is I get to sort of rub shoulders with traders that have different ideas about the market, different opinions, and it's the tools they use. I certainly will admit I haven't figured everything out. I've figured out enough to stay on the right side of where I'm aiming to be, but there's definitely tools and tips and tricks that I haven't figured out. And I have heard volume profiles. I think I've heard Jordan mention about it. So maybe I'll throw it up. Maybe I'll throw it up on the chart and just kind of see how it correlates with these kind of price points and see how price moves from it.
Yeah, I think volume profiles got very popular since TradingView sort of added it to their tools to be able to use. I think you still have to pay for the ability to use it. But yeah, it got a lot more popular than it used to be. Kind of hidden within the sort of professional game, I guess, volume profile and whatnot. But now it's a tool that's kind of widely accessible now. So I think it's another one of those where people will jump on that to kind of have a little look at it and see what it is. Is it very necessary? Everything in context for me is all. It's never looking at a market for me and going, yeah, this is just going to go short because it's broken out of that level. It's well, what is the driver behind it? What's actually happening? Is there any kind of impact of why that's going lower? Like I said before, I do use a lot of currency strength and weakness in my trading as well, especially from a sort of swing trading point of view. So I always have to look at a market and think, why am I getting involved in that in the first place? Sometimes I do a lot of my work away from the chart. So I always kind of think to myself, why do I want to be in that particular currency, or why do I want to be involved with that? What is a weaker currency maybe I can put it against? And then I go to the chart, then I go and look, what are the conditions that are being met at that point? Are the conditions that should be developed from currency strength and weakness, are they there or are they not there? If they're not there, maybe I've got to wait a little bit longer. If they're there, that could be an opportunity then to kind of go into that market and just look at what we're looking at now, really, highs, lows, support, resistance, and then try and develop something off the back of that.
So are you using like GDP numbers, CPI numbers, interest rate differentials? Are you using these to kind of score them yourselves, create scorecards, compare them? How are you marking up weak and strong?
So actually, I have a technical analysis based strength meter.
No way.
Yeah, so I can try and bring it up actually. Let me see if I can bring this up here. I always show the guys every week, and it's something we kind of go through together. Let me see. Hang on, let me just add my screen back. So this is the sort of work that I do away from the charts. So I give this kind of scoring system, and it's like, and I learned this many years ago from a really great trader. His name's Ray Gilmore. He has a lot into sort of committing a trader reports, seasonal reports, things like that. He does a lot into that kind of stuff. But he basically created a currency strength meter off the back of cycles within the market. So if I just bring on my chart here. So essentially we have kind of three sort of scores that you can have. So if a market is in an upward trend, the base currency will get 1 and the other currency will get nothing. Okay. If it was the other way around and in a downward trend, it would be 0, 1. And if it's in a range, you get 0, 0. Essentially, that's how I kind of score conditions within the pairs. So then obviously, let's say you've got cable here. Let's say you've got pound is bullish against the dollar, against the Australian dollar, against Kiwi, against CAD, and you can clearly see that it's making higher highs and higher lows. I'll give that a score of 4 to pound and 0 to the other currencies. So then it comes out and gives me at the end of it basically a scoring prediction of whether that currency is strong or weak. And then I plot it into this line graph that you see here. And basically this is just showing me what currencies are strong, what currencies are weak at the moment. So I've got this kind of like key down through here. So I can see that pound has been one of the stronger currencies for a while. However, we've come up to a point now where I have like a reversal system in play as well. It's quite hard to explain in just one go. But let's say I take sort of CAD yen here, for instance. I can see that sort of CAD, which is the green line, yen, which is the white line there. I can see that at some point they cross over in time. So essentially, I would be looking at potentially buying CAD yen at that point and having a look at the trend within that sort of area. But it's all done from a sort of technical basis. I have this weekly scoring that I do. I then come to this currency heat map on a Sunday, and I look at sort of momentum and things like that, and what phase the market is in. And that's how I kind of break down. But yeah, I use the scoring system to be able to kind of plot my swing trading. So there was a really good example of this recently. I think we were looking at sort of dollar yen longs essentially. Now I can't really draw on here, but it was around about that time. So you can see here sort of dollar starting to sort of rally, which is the red line. You've got the white line, which is the Japanese yen. They've crossed over, but I like to look at when those extremes have been made. So when the dollar's starting to kind of climb here, that's when I'm sort of looking for dollar yen longs at that point. And that was around about sort of 22nd of January. So if we go to dollar yen and we have a look at sort of 22nd of January, from this point onwards, I want to be looking for potential long positions in the market. So that's the way I kind of develop that. It kind of gets you a little bit late to the party sometimes, but obviously price comes, find support. And if I was still looking for longs, then the market rallied. There was a really good example. I don't know if I'll be able to find it, but dollar Swiss. So it's telling us, I've still got the line on the chart. It's telling us to be long since the 16th of January. So all I would do then is kind of match the conditions up from my higher time frame, lower time frame, and be looking to see, can we get some opportunities to the upside? Now, at the moment, dollar and Swiss are kind of in the same sort of area at the moment. Dollar's in the sort of negative half of the currency strength meter. However, the Swiss franc is sort of what I would class as in my reversal zone. So if we were kind of pushing from these kind of -5s into the -4 going into next week, I would really be interested in potentially looking at the Swiss franc long at that point. So hopefully that makes sense.
And you built all that?
Yeah.
Wow. So traders, if you can't make money, it's because you're up against smarty pants like John, who's built out this whole crazy site. But I love that because trading is so unique, and you found a way that you can apply your kind of biases to it by creating I've never seen a technical strength indicator. That's fascinating. That's really, really.
Yeah.
So I've got to ask, how do you manage risk around these? Are you looking for very specific price points, or are they more positional plays?
No, very much just looking for sort of on this type of trading, definitely looking for more like position style, but also I do kind of follow a structure of wanting to understand the condition of that market. So I have sort of a breakdown of, is it in a primary phase? Is it in a secondary phase? If it's in the secondary phase, I'm looking to see if the market kind of goes lower. So a good example of it is when we're pulling back here on dollar Swiss. I would say from that sort of daily candlestick, we were more moving towards a secondary phase in the market. So I would now be looking at my 4-hour time frame. And the way I like to look at it is, are my lows getting lower? Are my lower highs getting lower, essentially, in the market? Because if the market's going to switch trend, that's what should technically happen in a trended environment. When that begins to fail, that's when I'm interested. So essentially, we've got this kind of lower high, lower low pattern. We get this kind of breakdown here, and then we get the classic sort of double bottom situation going on. As soon as we kind of clear those highs there, my mindset sort of switched at that point. It's okay, we're going back into that primary phase now. So the next day I'll be looking at sort of lower time frames and trying to basically do what we were talking about earlier, identify sort of lows or areas of consolidation, look for price to break those, pull back, continue on. I also have like a sort of trend following strategy with the 50 MA. If price stays above the 50, closes above it, I'll happily look for long positions on that as well, which on an hourly chart can work quite well under the right circumstances. You don't want to be doing that all the time, but when you've got the right circumstances met, then yeah, that's something I like to look at. I also love the double bottom patterns, double top patterns. They're my favorite type of things to work with. So
you don't buy into the idea of like double bottoms. There's liquidity under there. The market's going to spike it. It's going to drive up. That's how it was taught to me. And I was like, okay, stay away from double bottoms, stay away from double tops. If I have my stop loss on a double bottom, the market's definitely coming for me. That was kind of this idea that I got taught a couple of years ago. I don't use this now. Like, no. I challenge that idea heavily now.
Yeah, I just don't. Obviously, the market does go to areas, but I look at it as it goes to areas of volume. Where's the volume been in the past? Now, I think obviously as retail, when I was learning as well, you get kind of a book about that thick full of just market patterns and things like that. And you've got the double top, double bottom pattern and whatnot. Now, there are moments where price will break out of that, but then sink lower. Obviously, there's areas here where you could argue there was a double bottom or double top, forming here. Price breaks above it and then straight down, and you'd probably be going, if I didn't put my stop there, I'd still be in this trade. And you go and chase it here probably, and then put your stop loss just above that high, and you get taken out there. It's all context for me. I think it's more important about where that starts to develop and what area that develops in. I don't think you can go and look at every double top and double bottom pattern and think that's going to work, because it's just not going to work. But I like the theory of, if price is going to continue to, let's say, go lower, then it should make new lows. It should. If it stops doing that, then there's an imbalance somewhere. There's a difference going on. There is maybe the narrative of selling has stopped now, and that buyers are stepping in. That's what I kind of theorize around it. Do I believe in sort of sweeps of liquidity and stuff? I don't know. I'm not fully convinced on that, to be honest. Obviously, you can argue that where like there's a low here, the market comes and takes that low and then reverses. Yeah. But is that just institutions getting a good price, a better price? That's the way I kind of look at it. But
yeah, 3 years ago, I would have argued that. 3 years ago, I'd be like, no, that was a deliberate stop hunt. That was a manipulation. But to be fair, there's one thing I incorporate in my trading, and it is just market is going to move lower until it finds enough willing and able buyers. That's it. Now, I know that sounds like, hey, gravity is a real thing. Sure. But if you start thinking about the market as it's just going to constantly move until it finds an opposing force, this could be sellers closing shorts, adding buying pressure. It could be buyers adding buys, adding buying pressure. We don't always have to have buyers in the market to turn markets. It could be sellers just pulling out of shorts. And then that creates this domino effect of more sellers going, well, I was in profit, now I'm not. And it's kind of like that seesaw. We've got this sort of weight on one side, weight on the other, but you can actually get it to move down by placing weight on one side. You can also get it to move down by removing weight off the other side. That was a huge clicking point in my moment, which made me stop looking at these liquidity stop hunt manipulation, the market's against you narrative, and just saying, this is an interesting buying point. Why? Because people in the past said, hey, I'm going to get long here, I'm going to buy here. Sellers said, hey, I'm going to get out of my shorts round about these levels. These are just interesting price points. So I'm off on a rant. I need to stop. But that's
no, you're good. You're good.
My interpretation of it.
I've got another question for you, actually, Rich from LS again. Rich, if you tried on the short time frame, 1 minute or 5 minute, do you even consider macro data in your bias when open or closing trades, or do you use the larger time frame technicals to assess your bias in the long term?
So high time frames gives me the context. Smaller time frames, so 1 minute, 5 minute, they're just for me entries. Red news folders, I'm getting out of the market. I can't manage risk with a 12 pip stop loss if the market's going to wick 25 pips. I'm going to get slippage. So for the most part, the entries are lower time frames, but the higher time frames gives me that context that John was talking about earlier. So just marking out them higher time frame areas and saying, this looks interesting, and then watching price on a smaller time frame to see if I can identify that moment where we get that conviction, we get that structure breaks on 1 minute charts. They mean nothing. Put them into context of higher time frame zones. I believe that you can be very profitable, but you've got to have the psychology to want to walk that tightrope with a 7 pip stop loss, leveraging your account massively, opening yourself up to all kinds of exposure of slippage and stuff like that as well. So high time frame context, and then lower time frame just for entries. But average stops around about 12 pips. That's the happy medium for me.
I'm guessing, Rich, you tried sessions then. You don't trade all day.
No, I trade 8 a.m. UK until 5 p.m. Anything after 4 p.m. UK time, market's getting a bit quiet. I don't really want to be entering into new trades because I don't want to be watching it till 10 o'clock at night. And I just London session. You get some really good moves around London Open, and then New York session as well, round about the Open. They're my favorite.
Have you tried anything New York session today? Is there anything that you've looked at that you think that's pretty decent?
Yeah, I'm trying to. I don't know how it's going. I set it up before we jumped on the stream. I'm actually trying to sell GU and EU. So lovely. Yeah, this is what
okay,
I've got running at the moment.
Let me add your thing in. Sorry, yeah, screen there.
This is I think my entry is somewhere here, and it's just context, high time frame charts, and I'm just looking at the market breaking down. We're bearish. We're broken under this low. We're broken under this low, and this kind of pattern up here. The market doesn't always have to pull back. Feel these kind of fair value gap. That's another kind of buzzword, but it doesn't always have to. If we've got huge selling pressure in here, there's no reason why the market, if it's showing me lower lows, and if I'm looking at this on a 1 hour chart, we can see that we get a huge amount of buying interest in here, almost half a dozen red candles back to back. I'm anticipating that hey, where did the market decide to sell from? Well, round about here. If I can put my stop above all these fantastic little levels, like we've got this level here, we've got another level here, SR flips almost. As long as I can put my stop behind them, I've got multiple confluences stacking up. Decision point for the market to move lower. It broke lower. Pullback may be more willing and able sellers in this price point. Any buyers who are holding this, would you want to hold a buy into this level? Looks like it could be a good potential take profit area. If it does, maybe that adds selling pressure. So yeah, I kind of looked at this and I was like, well, maybe if this zone fails, we can get a break lower, pullback, and a continuation of that. But same again, where did buyers come in? Down here. So I'm just looking for a nice little small move to the downside. And I think it was very, very similar on Euro USD. I'll go and check the terminal, see if this stuff was triggered in, but we can see 1 hour charts, lovely 3 bearish candles, decision point from here. Make sure the stop's nice and above, these kind of levels here and here. Simple sort of supply and demand stuff. And then just wait for the market to come back where the market made decisions. Maybe it was even here. Stops in a sensible place. If this ran my stop, it gives me more information about the market. What does it tell me? tells me buyers are in control. If buyers are in control, why on earth do I want to be a seller if the market does this? I'd rather be a buyer on a retest of an area that failed. So just that kind of stuff is just reading higher time frame context and then looking down 15-minute charts, looking at the price action, trying to get a bit more information on, where this sea of red candles started, and trying to position myself, round about where that decision point decided to push the market lower, and seeing if I can find volume round about that level. And then on the trades I don't like, sometimes closing about 3 pips in profit and going, I'll just take me profit and run. the struggles of a trader, hey?
Yeah, absolutely. So you're putting your stop basically in areas where you think, I'm definitely wrong at this point.
Yeah, I'm willing to pay for more information about the market. If the market hits my stop, it should be telling me something. I've tried many, many times trading like this kind of stuff, and it just, what does this tell me? Potentially sellers could still drive price lower, and I'm now stopped out. The FOMO in me, the revenge trading in me, it's just fuel for the fire. I want to be in a nice, comfortable position. So chucking my stop up here somewhere, putting myself in a nice, safe position, and trying not to sit there staring at the 1-minute charts, reading all this price action, getting sucked into the noise.
No, absolutely. So you don't wait for any kind of, I guess, technical. I know you said you talked about patterns before. You don't wait for any kind of pattern to kind of say, yep, that is good for me to go in this trade. You kind of look at the zone and think, well, that's where the selling pressures come from initially. When it gets back here, I want to be a seller again.
Have you seen Lord of the Rings?
Yeah.
You know where Gandalf is on that bridge and he's got his cane and he stamps it on the floor and he says, "You shall not pass." Yeah. I sent a GIF to a friend of mine today with my GU analysis, and that was the picture I attached to it. I was like, I'm going to stand in front of the market and say, "You shall not pass." You've got to remember that trading is probabilities, and I've done so much study and I have an interpretation of how I think markets are going to move, and there's a slightly higher probability of this moving in my favor. Do I get run over? Yeah. Sometimes I just get run over. I don't even see profit. The market just goes straight up and it takes me out. But when it does, there's this beautiful trade-off where I get to say, hey, you're giving me more information about the market now, and I can use that information to adjust my bias. So yeah, I love to stand in front of the markets, put my hand out and say, "You shall not pass." And sometimes the market laughs at me as it runs me over. It's part of trading, right?
Yeah, absolutely. Absolutely. I like that. I'm going to take that. I'll use that in the future. Sorry, there's another question for you. I just wanted to, LS, last question, I promise. LS, ask as many questions as you feel if you want to. Do you guys follow a written protocol? Some traders use step-by-step protocols to open and exit trades, or do you guys just memorize the strategy just based on a trade? I'm a belief you have to have some discretion to what you do. I don't necessarily follow a protocol or a plan in terms of it has to create that candlestick type in order for me to get involved with the market, or it has to create that sort of pattern. If I monitor an area and I feel that buyers or sellers are getting involved at that point, that's enough for me to kind of go in. I used to get really fixated on needing to see an engulfing candle. Like I had to see an engulfing, and the amount of trades that you will miss because of that. Vice versa, you'll probably get not be involved with some losing trades as well. But I guaranteed that you'll miss more by just trying to focus too strictly. I don't believe being very strict. I think you've got to be discretionary in how you kind of do things. Obviously, there's important points as well. I know, Rich, you're very data heavy, so you might be against that argument essentially. But still, I feel like there is a narrative of what is the feeling of the market. If something is like dropping like a stone, do you really want to be buying just because the strategy tells you to buy? I think that you have to have a little bit of context in that market. Is there heavy news events around? Like Rich said, we don't really want to be trading around those events. I think there's too much risk. I know a lot of traders like to trade NFP. I think that is a very bad thing to do. So yeah, what's your thought, Rich, on that, having a strict sort of protocol in place or step by step?
So before we came on stream, John, did you tell me 10 years you've been trading?
Around 10 years, not successfully for 10 years, but
okay.
Yeah, I've been in the markets for 10 years. Yeah.
So I'm aspiring to kind of adopt the level of knowledge that John's got. I'm a baby here. I've only been trading 5 or 6 years, and I traded patterns because I was afraid of putting my opinion to the market and being wrong and having to look myself in the mirror and say I was wrong. If my pattern's wrong, I can just say, oh well, I followed my trading edge. Trading becomes less painful when I get to hide behind a strategy. So for 3 years, I traded patterns, and the pattern would be like the protocol would be, are sellers in control? Yes, that's a tick box exercise. I can now go to my trading plan, which we should all have some kind of rules-based system written out if we're newer to trading, and I was. So I would go to my trading plan and I would write, sellers are in control. That means I must be a seller. And I would then have another question that says, where did sellers either take control or where did they gain control of price? And my job would then be to go, okay, well, very mechanically, it would be kind of in these 2 selling candles here. So let me put a box on these 2 selling candles. We can see that, you know, this bullish candle buyers tried to take control. So now I've got who's in control? Sellers. I know my buyers. And obviously I've got to work on a set time frame. I would then go, where did they take control? Then I'd mark it out. Now I've got a framework or a zone that I'm interested in. And then I'd say, how am I going to enter this trade? And it would be, I'm going to enter with a limit order, right where the sellers took control. It could be this low wick, it could be this close of this candle, whatever the case might be. My data told me where to enter because I went back and studied every single possible entry on every time frame I could think of and recorded about 19 different columns to try and figure out how markets might be moving and what was optimal. And then I've done dozens and dozens of studies on different pairs to affirm that data rather than trying to curve fit it. Once I had that, that was my protocol. It gave me information and a feedback to say, who's in control? Where did they take control? Where do I want to join in? Where does my stop loss have to be? Where does my take profit have to be? And that was my pattern, if you like. Now, why did I go 7 months of break even? Because I didn't know how to read the market outside of that one pattern. Now, the pattern was good based on, there was a lot of logic behind it. But when the markets say, hey, we're going to be illogical, I didn't know what to do apart from keep trading my pattern. And the problem is, as John said, I was just buying markets that were just absolutely tanking because of a fundamental shift or something like that. And I stood there and thought, you know, Lord of the Rings, you shall not pass. And the market left me for dead. And I'm like, oh, okay, guess you're going to go past then. And I didn't have any tools to deal with that. So where John touched on discretion, that's the phase where it's taken me 5 years. But 6 weeks ago, I started to become a discretionary trader. And it frightens me to death because I have to say I'm wrong. If I read the market with all the context, I've got to take that on the chin and say my analysis was wrong. I've got to try not to FOMO. I've got to try not to revenge trade and all those wonderful emotions that we battle with as traders. And the P&L difference, the equity curve difference is disgusting between pattern trading and my discretionary trading. So I'm keeping my risk incredibly low, but yeah, I'm keen to see what the next 6 weeks tell me. I still trade in my pattern stuff. I mean, I've been doing it too long not to, but I have a separate account where I trade just the discretionary stuff. And it's night and day difference. It's, yeah, it's interesting stuff, but I couldn't do that without the experience. And so it's taken me 5 years to get to that point.
Yeah, I think that's a good point you make. I think, you know, there is strategies that I use to enter the market on a regular basis, you know, but it's almost knowing when and when not to use it. That's where the discretion comes in. It's almost like having an EA. I could have an EA coded up doing my strategy, and it wouldn't. I would probably think I could outperform an EA that's just doing rules-based stuff. You know, I could outperform that because I understand when to use it, when not to use it. It's like a guy messaged me the other day saying that lost quite a bit of money on trying to short gold because his EA was trying to short gold all the time. You understand that market is in a mode right now where it is aggressively bullish. You've got to switch that EA off. You've got to go for, you know, and take a little bit of context of what the market's doing, that discretion. Is it really the right time to be doing that sort of trading at that point? Yes or no? And I think that can be a game changer for some people. It's very hard to do because, like you said, you've got to be, your whole system might tell you to be a buyer at that point. But, you know, that's great. but then you are playing probabilities then. But I feel like you can make your probabilities a little bit more efficient if you can understand the market condition. You know, that's the way I've always kind of looked at it. How can I be more efficient? How can I make my strategy more efficient? Is it by understanding the context of that market? What drives that market? Is it a fundamental bias at the minute? What is that fundamental bias? And then go down the rabbit hole of understanding that kind of stuff. You know, do you look at commitment of trader reports? You know, I like to look at commitment of trader reports when it comes to things like commodities, you know, because that's a very supply demand market. It's very business sort of driven. So although the commitment of traders report comes out a week later, if you know that, you know, commercials are selling very heavily of a particular commodity, do you really want to be long at that point? You know, they're selling it because it's a really good price to sell at. The price is high. They're going to be selling really aggressively. That supply and demand is going to switch at one point, and you don't want to be on the wrong side of that because it can just go, you know. So yeah, that's a good question. I think we should maybe end it on that question. But you know, it's been an absolute pleasure to have you, Rich. I definitely would love to have you on again. I think we kind of went a bit more sort of talking about everything else rather than looking at some charts of interest. But it's been absolutely fantastic to have you on, and I really appreciate all your sort of wisdom in the markets as well. You know, it's really nice to hear different views and stuff.
No, it's been a pleasure. It's been a real pleasure. Thanks ever so much for having me on. If the opportunity comes up again, it's a yes from me.
Thank you, mate. Thank you. And guys, if you really want to jump over and watch Rich are you on daily? Monday to Friday?
Yep. Yeah, Monday to Friday, Trade Delicious TV. We stream on YouTube, and we're just trading the markets, looking at the analysis, and just having a general sort of light-hearted trading chat as well each day.
Yeah, I've been and had a look at some of the live streams and been in the background of a couple of them, Rich, and they are really good. So I recommend everybody that likes this stream go and head over to Trade Delicious as well. I'm pretty sure you'll love that. Everybody, just leave a like on the stream if you want Rich to come back. That's what I'm going to use. Get us to at least 5-6 likes, and yeah, that was great. Thanks, Rich, for joining me.
Thanks a lot. Really appreciate it.
Right, guys, thank you everyone for joining. If you did like it, hit that subscribe button, and I will be back on Thursday 2 p.m. So I'll catch you then, guys. Have a great trading week, and I'll see you then.
Cheers.